And so you look at your physical gold that way, and most people they have zero, and stop looking at it as a way to like make an overnight success of yourself. Just there's a percentage, and I give a little formula in the book to figure out your percentage. And it's probably lower than you think, but get that percentage of physical gold. Then you look at how do I make money in this market? Well, if the gold price goes to 2250, which I think by the end of the year is very likely, okay, that's actually kind of a big move. It's 10-12%.
The gold market is experiencing steady price increases because the Federal Reserve is being cautious about its future decisions. Following the central bank's decision to raise interest rates by 25 basis points, the Federal Reserve Chairman, Powell, mentioned that they are currently uncertain about whether they will raise rates again in September or keep them the same. This uncertainty is contributing to the positive performance of the gold market. E.B. Tucker, editor of the Tucker Letter, believes that the gold price will likely increase to $2,250 by the end of the year, which would represent a significant 10 to 12% gain. Investors have always been attracted to gold, and its price has gone up significantly in the last 50 years. Gold has the ability to hold its value over time, and its price is greatly influenced by the balance between supply and demand, particularly the demand from large ETFs. Government vaults and central banks also play a crucial role in creating demand for gold. Gold tends to move in the opposite direction of the US dollar because it is priced in dollars, making it a protective measure against inflation. On the supply side, most of the gold comes from mining production. Tucker wants to clarify that the price of gold is unlikely to suddenly skyrocket to an extremely high value, like $10,000 overnight. The gold market is controlled by a powerful mechanism that is not solely driven by the basic forces of supply and demand. Before diving into E.B. Tucker's interview, don't forget to show your support by giving this video a big thumbs up and subscribing to our channel. Currently, 96% of our viewers have not subscribed to our channel. Our goal is to reach 1,000 subscribers as soon as possible, and we cannot achieve this without your support.
I don't think people really understand gold, and especially the gold bug community. I'm always like really bothered by the fact that they don't really understand how this works. The gold price is unlikely to like rocket higher, to like some $10,000 overnight. It's almost impossible because it's completely controlled by a mechanism that's very strong, and it's much stronger than supply demand. Supply demand does not really affect the gold price at all. I mean, I've been to all these distribution facilities, to smelting operations. I wrote about this in the newsletter this summer. People should see that I've got the fake bars that I saw at the smelter in Switzerland and all this stuff. So I mean, I'm really in this market, but at the same time, I'm actually very positive about gold. And what people that read my book know is that you actually don't need that much physical gold. Now, the problem is most people have zero. So, I mean, they're starting at zero, and then they think, oh, I better get some gold because it'll go to 10,000. It's probably not going to happen. And so the way you look at your gold investment is you look at your physical gold. It's like your baseline. It's like your foundation of your financial house. Gold price has a real buyer at some point, and the real buyer knows what that thing is worth. And so you're entering this period where you want to make sure your percentage of physical gold is right. Okay, it doesn't probably need to be as big as you think, but you want to make sure that it's right. And I give that formula in the book. And then you look at where's your upside. Well, a move to 2250 changes the value of the royalty of the gold royalty, which is like a 30-year no-cost option on production from mines, is just goes crazy when the gold price moves. And when you look at these stocks, it's like people say, well, the stocks are down. Yeah, I mean, pull them all up, like Franco-Nevada all the way down to the little guys. The chart all looks the same. Look at the volume. There's nobody buying these things. And so what you want to try to do in your financial life is to, when nobody's buying something, it means that nobody's paying attention.
The Federal Reserve, the central bank of the United States, recently increased its benchmark interest rates by 25 basis points, making it the highest rate in 22 years. This move is part of their efforts to control inflation in the country, which has been rising recently. The Federal Reserve has been gradually raising rates since March of the previous year to tackle inflation. As a result, headline inflation has started to come down from its peak of over 9% in June 2022 and is now closer to the Federal Reserve's target of 2%. The Federal Reserve is aiming to achieve a soft landing, which means controlling inflation without causing a recession. Tucker highlights that Jerome is raising interest rates to quickly reduce the amount of money circulating in the financial system. By raising interest rates, the Federal Reserve is attempting to prevent the economy from overheating and to address the consequences of the extensive debt buildup. Let's watch E.B. Tucker's interview with Liberty and Finance.
Today they'll announce maybe they'll go up 25 basis points. I don't think that's really the point. The thing that I'd like people to take away, and I write about this in my newsletter, the Tucker letter, ebtucker.com, is that this is not capitalism, okay? It's very important that people understand that, okay? It's not capitalism. What this is a system controlled by committee. And people need to understand that what's happening here is that for 22 years, this is the highest rates. That's correct. For the last 22 years, we entered this new era where they're trying to control the system using credit. That's what they're trying to do. And honestly, so far, so good. You had a little blow up in 2008, but then you went into this period of 12 or 13 years of controlled growth. Now, what you have is this controlled growth with the occasional panic. Do you notice this? This is not tradable. You can't trade this. Like if you tried to short the market during COVID, there's no way that you successfully did that. It was luck if you did, because it lost a third of its value, $12 trillion in 3 weeks. And then the Fed came out and said they were going to buy junk bonds, and it shot the market back higher, and you're back into a bull market. So if you tried to use 20th century economics textbook type of trading strategies, you lost. And you kept losing. And one of the things that bothers me about the gold community is people always talking about this honest money and all this stuff. That's a nice idea, and it's a good thing to study, and it's an important thing to learn about. But you have to be realistic about the system that you're in, and it's not a capitalist system. What Jerome is doing is he's raising the rates to pull back liquidity out of the system as fast as possible. Now, why is he doing it as fast as possible? It's very simple. Because you have exploded the amount of debt. The amount of debt in the world has gone like totally crazy to $300 trillion, right? Over the last 22 years, like you're discussing. Why is that happening? Because the debt has created the perception of growth. So you haven't really had growth. What you've had is growth in the value of things.
The gold market is currently experiencing steady price increases due to the Federal Reserve's cautious approach to future interest rate decisions. If the Fed does not raise rates again in September, as some analysts expect, gold prices could rise even higher by the end of the year. Do you think gold is a good investment for the future, given the current economic climate? What are your thoughts on E.B. Tucker's prediction that the price of gold will reach $2,250 by the end of the year? That's all from us. If you enjoyed this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos.